Is there really a best time to buy crypto, or is that just another myth in the ever-changing world of digital assets? In this video, we're breaking down what really matters: market cycles, timing strategies like dollar cost averaging, and how to avoid one of the biggest mistakes in crypto, and that is FOMO buying. Let's dig into the facts and help you make smarter, more confident decisions with your crypto investments. Let's start with the big question: can you actually time the market? Sure, buying the dip sounds great in theory, but in practice, it's nearly impossible to predict the bottom. Even seasoned traders get it wrong. That's why many investors say, time in the market beats timing the market. The idea? It's not about finding the perfect entry point, it's about staying consistent and focused on the long game. But that doesn't mean you should just buy at random. Let's talk about how market cycles can help you understand the bigger picture. Crypto markets move in cycles, typically driven by broader economic trends, Bitcoin halving events, or investor sentiment. You'll often hear terms like bull market or bear market. A bull market is when prices are rising, optimism is high, and it feels like everything is going to the moon. A bear market is the opposite: prices are falling, fear is high, and headlines are full of doom and gloom. Knowing where we are in the cycle can help guide your strategy. Buying during a bear market feels uncomfortable, but historically, it's when the biggest long-term gains have been made. So how do you invest without stressing about perfect timing? Enter dollar cost averaging, or DCA. DCA means you invest a fixed amount at regular intervals, like $50 every week, regardless of the price. Sometimes you buy high, sometimes low, but over time, you average out your cost and reduce your exposure to short-term volatility. It's one of the most popular and beginner-friendly strategies, especially during unpredictable market conditions. Plus, it removes the emotional pressure of trying to guess when to buy. Now let's talk about the emotional trap that catches even experienced investors: FOMO, or the fear of missing out. It usually happens when a coin suddenly pumps 40%, social media is buzzing, and you feel like you're missing a once-in-a-lifetime opportunity. But here's the truth: buying during hype often means buying at the top. Instead of chasing trends, build a strategy that makes sense for you, and stick with it. Stay grounded in research, understand your risk tolerance, and never invest more than you can afford to lose. So, what's the best time to buy crypto? There's no magic answer. But there is a smart approach. Understand market cycles. Use tools like DCA. And don't let emotion lead your decisions. And remember, crypto is a long game. It's less about when you buy, and more about how you manage your journey. And that's it. If you found this video helpful, give it a thumbs up, subscribe, tap the bell for more crypto insights like this, and don't forget to visit CoinMama at www.coinmama.com.